Hi, everybody. This is Chris with Invest LYH. And tonight I'm going to go over Section 8 housing. Let me move this back a little bit. There we go. A little better to see me here. Tonight I'm going to go over Section 8 housing from a supply and demand perspective so you guys can see how it plays out in your market. Like I know how it plays out here in Lynchburg, and I also know how it plays out in some places in Florida. Um, there are some telling signs of whether or not Section 8 is a viable option for you. So I want to go over that and look at it from my market here um, of Lynchburg, but also, excuse me, also kind of so you can take this understanding and move it to another market. So give me just a second. I'm going to share my screen and we will go ahead and talk through it. Second here, I just sort of make sure that. All right, I think you guys can see Section 8, supply and demand. If you guys have watched a couple of my lives over the past few weeks, and just in case you guys were wondering why I do this, I have office hours on Thursday nights with my students where I teach macroeconomics. And a lot of times when they ask me questions, I use real estate examples because real estate is it's not necessarily a free market, but it's a lot freer than most people think. And the reason why it's freer when we look at it from a supply and demand perspective is because anybody in real estate can become part of the supply. Meaning I can buy a home, you can buy a home, my neighbor can buy a home and use it as a rental. And in order for a free market to exist, the supply has to have easy entry and exit. And as much as it takes sometimes 45 to 60 days to close on a home, it is relatively easy to enter and to exit the market. So let's talk about Section 8. Section 8 is it's a system that the government uses to help people who don't have a significant income to find housing. And the way that it plays out with supply and demand is what I want to go over. So if we were to draw a simple graph, supply of homes and demand for homes, we have price over here and we have the quantity over here. And right here we have 0. And if we already know from previous examples that at this point here, we have a price level for a quantity demanded, okay? What Section 8 can do is it could shift the demand curve away from 0. Now, if we shift the demand curve away from 0, what happens to the price? It puts upward pressure on that price. So now we have a higher price at price level 2 for a higher quantity level 2. Now, this is in a simple market where we are assuming that the supply is fixed. Now, we know that the supply is not fixed. So what can happen to the supply? Well, it can shift as well. You start earning pretty good profits. People see that here you are profitable. What's going to happen is people are going to jump in because why? Because in a free market, easy entry, check, and easy exit, check. So they're going to jump into this market, which is going to shift the supply curve outward. Oh, that's a horrible arrow. Let's try that again. There we go. Now the supply curve moves to S2. And what does that do? Puts downward pressure on the price. So now we have a higher quantity, quantity 3, at a relatively similar price to where we started at price level 3. Okay? So when we look at Section 8 housing, we have to identify these steps because this is how it works, right? If we were to look this as like a stepped method. What's happening now is Section 8 prices are increasing. And then we know from, if you watch several YouTube videos, that they generally look at a 5-year. There's a guy, his name is Matt, the lumberjack landlord, and he explains this. And then there's another guy named Dion Talk Financial, and they explain this very well. There's a 5-year look back on Section 8. So what happens is we're in 24. Well, we go back 5 years. And what we're seeing now, right, is the majority of the raises that we saw in those years, and then we started flattening out, is picking up. So it's increasing. It's causing these prices to increase. And they're starting to level out now, but they're up there. So where are we in this section? If we know that prices are increasing, we know that it shifted the demand curve. So step 1 would be to determine your market, which means figure out where you are in equilibrium. Okay? Price for quantity. Step 2, what is happening to demand? Is it shifting outward? Is it remaining stable? Or is it shifting inward? Because there are areas where it could be shifting inward. Okay? Step 3, are you positioned hold on. It's hard to write on this thing. Positioned for the increased rate. Meaning, are you part of the supply? Do you have units that could be used for Section 8? And then step 4 would be to review the step 2. So, because I want to get back to this supply thing. So step 4 is review step 2. Why? Because we got to see, is demand shifting back or is it shifting out again? Now, real quick about the supply, about step 3. Keep in mind that step 3 is about the supply, which means it could be efficiencies, or I guess studios, right? That's what we call them. Studio, 1 bedroom, 1 bath, 2 bed, 2 bath, 3 bed, 2 bath, 4 bed, 2 bath, and so forth. And there you can see the whole list on the website. But I can tell you locally, this one pays more than 1 bedroom, 1 bath. So which market do I want to be in as a supplier? If you said studio, you are correct. And I just happen to be flipping a studio right now. So that's excellent. But Would I want a 2-bedroom, 2-bath or a 2-bedroom, 1-bath? Possibly. But I would have to look at that market in order to determine it. Because here's the other thing about this. Each one of these markets has their own supply and demand curve. So if we know that there's a lot of, let's say, single people in the area that are just not doing very well, we can see that these guys would be much more beneficial than, let's say, a family of 4, right? That might be a very low demand curve as opposed to the supply. Now, in my classes and here, I'm going to tell you guys, I use these straight X style supply and demand curves. And the reason why I do it is because it's easy enough to see the equilibrium, which causes price and quantity. In real life, when we look at supply curves that we graph, it's generally something like this. They have these very they're not straight. They're very curved. And in advanced econ courses, we learn this is why econ, a lot of times they do math, because they're trying to find out that marginal change between this point 1 and this point 2. And if we decrease the price from price 1 to price 2, what will that cause? And can we meet that demand? A little behind the curtain, sorry about that. But just so you guys know, like if we were to do an overview of this, looking at Section 8 in terms of economics, we want to know this basic structure here. And right now it's assuming that there's a fixed supply, but we know that that supply is not fixed. In real estate, it changes a little slower than other markets. It's not as quick as, say, the equities market. But which is great for us, because then we can read, are people jumping into the market or are they jumping out? And what we can see here is that the pricing mechanism, if I were to use this green highlight, we started here, we shifted up here, and if we see more people jumping into it, we know that the price is going to shift down. So what do we want to do? We want to make sure that we position ourselves for the increase in price here. And then when we see that more people are jumping into the market, we need to make sure that we take appropriate action with our units to get out. Because what is a free market? Easy entry and exits. So we would exit the Section 8 market and go into the general population market. Okay. I know Gen Pop, I feel like I'm writing something about I feel like I'm writing something about whoa, hold the show here. Let me stop. There we go. I write Gen Pop on there and I feel like I'm writing something about the prison system. But anyway, that's what do we got here? We got 13 minutes. I usually say I'm going to try to do 10 minutes on econ every Thursday. So that was my spiel today. If you guys have if you guys have any questions about the economy, please let me know. I love going through this stuff. I mean, I really enjoy teaching it, and I do a lot of times people forget that the basics of economics are market-based. And even though we inject things into the market with third parties, a non-governmental example of that would be the insurance system. It is still market-based economics. And when we get past the macro level to the micro level, what happens is we see a lot of incentive structures develop. And I'm teaching macro right now. I'm not teaching micro, so I'm not really going to get into the incentives aspect of it. But all right, 1407. I don't even know if I got anybody here who watched it, but if you did, thanks. If you're watching it in the future, thank you. You guys have a great day.